Hello, everyone, and welcome to part two of the cuts to the clean energy tax credits and the changes from the One Big Beautiful Bill. This is the Cal CPA's tax bill series. And this is going to be part two. Part one was the calculation of the green energy tax credits, ITCs and PTCs. Now for part two, we're going to jump into what is called the monetization or the usability of these credits. Okay, so just going to move into the usability of these credits. We know that, there's two paths to monetization: for profit, sell the credit; not for profit, elective pay, which is a refundable tax credit. Churches, schools, governments, municipalities. It's just been so great to work with all of these different types of entities that I never had a chance to work with before because they were not for profits. So it's been pretty awesome, feel good stories of, a community center putting in geothermal and getting a check from the government in order to do it. And now, having cheap, clean energy. So all of these stayed the same. Here's your table of what program is available. The P means you're can do elective pay, and the T means transfer. Some of them you can do both. The 45X advanced manufacturing, even a for-profit can do elective pay, carbon sequestration. If you need more information on these, your code section is 6417 for the elective pay, and it's 6418 for the transferability. There was a portal that the IRS put out in order to claim these credits. This portal is the same. They put the IRA tax credits and the chips in the same portal. So if you're a not-for-profit client, you have to do this in order to do elective pay for your 990T. If you have a for-profit client, you also have to do this, get a registration number that's going to go in the 3800 transfer election statement in order to sell that credit under what's called transferability. So we're going to go in here really quickly. Couple of takeaways for you. If you need a infographic for your not-for-profit clients, this is their journey. You have to be an applicable entity. You have to hire somebody to calculate the credit. You have to get the registration. There's a due diligence process and find the qualified basis. Then this is where your not-for-profit clients are like, I don't know what 3468, 3800, and 990T mean. So this is where we work with our CPA channel partners to say, hey, we're going to calculate the credit, put it on the general business credit form, and file that 990T in order to receive that refund check. This is an overview of the process, just so to get a visual so your clients know how they have to do this. They have to sign in, create an account, put the information, have the credit, all the way to that 990T. I put some examples in here just so if you're looking, here's a hospital, spent 30 million, got a $9 million check. And then moving over to the for-profits, even your for-profit clients are like, I am going to spend money. I'm a manufacturer. I'm going to do solar. I'm going to invest in this geothermal. I'm going to do thermal energy storage on my apartment building, whatever it might be. The process is the same, except for the end. Yeah, it's 3468, 3800. And then you're going to find a buyer and make that transfer happen. So all of the credits from the Inflation Reduction Act are still available under the OBBB. They didn't cut any. They actually added one called 40 Cap A, eligible for small agri-biodiesel producers, which, hey, fantastic. So if you have a client in that space, let us know. But these are all the other credits. So mainly what you're going to see is the 48 is all of the technologies under 48. From 25 and forward, all of the technologies under 48 Cap E. Those are your ITCs. So then here's how you make an election. The IRS put it out. Hey, you got to pursue the eligible credit, complete the registration number, all the requirements, place in service, have the cash from the buyer. And this is the information you need to have between buyer and seller. There's, there's contracts and insurance and a lot of other things. So if you have clients that are looking to buy, let us know. We can walk you through that. If you have clients looking to sell, let us know. We can help you with that. If you have clients that are like, I want to buy a credit, or I'm going to generate a credit, like, what do I get? Like, how much does it cost? Like, how much do I get for it? So smaller ITCs are like 85 cents on the dollar. Really large PTCs, or what they call wrapped credits, have insurance on them. Those are going for 95 cents on the dollar. So if you have a client who has an energy asset, is going to sell, they're going to sell the credit and they're going to keep, right, 85 cents on the dollar. If you have a client that's buying, they're going to save 15 cents. So basically on their tax bill, whatever their tax bill is, they'll be saving 15% of that number, which, it depends on what the number is. It's really, really worth it because it's a one-for-one tax offset. So this transferability is definitely a very, very big thing going forward from all these renewable energy tax credits. So please keep that in the forefront of your mind when you're talking to your clients. And then talking to your clients, like planning strategies, it's a little bit complicated. That's why I gave you the sheet that says, "Hey, when do these end?" Because it's you. What's the plan going forward? Do you have a building? Do you want to do ITC? Is it energy efficient? Like, how long does a project take to place in service? Is it going to straddle different tax years? All the termination dates, or like if you have a manufacturer, like, and they're doing R&D, they can also do the ITC, right? Or they could choose the 45X, or they can qualify for domestic content for their product. Also, a lot of the bigger clients are going to have these ESG goals, but just understanding what are your clients' goals? What are you going forward? How do you see energy and what money you're going to spend? And then we can figure out what's going to qualify, when it's going to go in service, and when you can either get a check from the government for installing the renewable energy, or you can find a purchaser of your credit and sell your credit, or the good old-fashioned way is you just use the credit against your tax. So understanding just the ROI, the great thing about both the Inflation Reduction Act and the OBBB is your client wanted to spend money, but they look at the return on investment for going green, and it used to be 20 years, 25 years. So now when they're planning, that might be 5 years, 4 years, 3 years, 7 years. It'll be within a range in order to get the green light on that project. And then that's where you, the CPA and Tri-Merit, come together and say, okay, you spent the money, here's your return, here's how it works. I work for Tri-Merit. We are a specialty tax firm. We basically founded by engineers. So, our claim to fame is any government program that requires modeling or engineering. That's kind of where we get involved. So, research and development tax credits, one of our staples. Energy efficient commercial building deductions and home credits, which we're going to talk about today, cost segregation, and then just an interesting, short part of history from the Inflation Reduction Act now to the OBBB, OBBBA, House Reconciliation, whatever we want to call it. Been a lot of changes, not only in how we go to market, what we do, the departments that we have. We work out as an extension of the CPA firms, right? So when it's that niche program that requires engineering, that's where we get involved. And so after the Inflation Reduction Act, we got into calculating renewable energy tax credits. And we can see here these two departments, the energy efficient commercial building deduction and energy efficient home credit, which we're going to have a cut from the OBBB, to our chagrin. But underneath here, we're going to talk about the changes, not only in renewable energy tax credits, but also, one of the most powerful things of the Inflation Reduction Act was that credit monetization. So not-for-profits having the elective pay option, and then, of course, for-profit companies being able to buy and sell the credits under the transferability. So that was a very high level of the OBBB right now for your clients in renewable energy. And so I just wanted to thank everybody for tuning in to this session of Unplugged. Cuts to the clean energy tax credit, or what we're not cut. And this sums up the Cal CPA's tax bill series on clean energy. Thank you for having me.